Evening, members present physically and virtually. I welcome you all for the today's program on setting up of a company in USA and taxation issue. This is going to be handled by an eminent speaker, none other than CA Varun Nirmal sir. Welcome you, sir.
Thank you.
It's a very interesting session. As we all know, very few professional practice in this area, setting up a company in USA and related to tax issues. Generally, big fours or those kind of professionals will handle this work, but Varun sir is an expert in this area. When lot of opportunities getting up abroad, even our members can also explore this area of practice, and they can guide their professionals, clients on this topic. This will be a helpful session, I feel. Hope it will all help you to gain this knowledge on this topic. And I have some important announcement to be made. We have an interesting session on 23rd April, Saturday, on virtual digital assets, mainly on cryptocurrency. The entire one-day session is divided into 5 technical sessions. 2 speakers addressing from US, one is CPA and CA, about how it has been evolved, how it is buying and selling, all those topics, and 3 speakers from Bangalore. Each speaker is a legal expert, High Court legal expert, and a taxation expert, income tax, and GST experts. And it's an excellent session. Those are wants to know about everything, know about crypto. And we have a RRC residential refresher course in Madikeri on 6th, 7th, 8th in 8th May in Madikeri in Paddington Resorts. I request members to register for these programs. And 4th May we have a full day seminar on cooperative audit, and 14th May we have a badminton tournament against income tax and GST department. With this information, I welcome you all for this very interesting session. I will welcome once again Varun Nirmal sir and all the members. I request our secretary Pramod to give a brief introduction of today's speaker, Varun Nirmal sir. Over to you, Pramod.
Thank you, Chairman, for the welcome address. Mr. CA Varun is a CA and CPA with more than 20 years of professional experience in handling international accounting, audit, income tax, incorporation, and advisory functions for US, Canada, and India clients. He is currently managing partner in Kashmira Nirmal & Co. He specializes in cloud accounting, US taxation, US GAAP, training for cloud accounting, and its implementation engagements. Mr. Varun has in his career worked with various KPO companies for implementing the finance and accounting process offshore and on cloud for SME clients. He manages the US accounting and tax practice for their firm. So here I present to you all Mr. Varun, who can throw light on these aspects today. Over to Varun.
Thank you, Chairman sir and Pramod for the introduction. So friends, today's topic, which we are actually going to cover, I hope everyone is able to see my screen. So as far as today's topic is concerned, incorporation in US and related taxation aspects, I would say. I would actually like to thank Srinivas and Pramod for giving. Actually, this is an interesting topic. We, as a chartered accountant profession, right, are at a threshold of I would say a crossroad wherein we probably can actually make it like it's like expand we have seen that how businesses are expanding globally, primarily also in US. And when businesses are expanding globally, we are actually connected to the businesses. So they would actually seek our advice most of the time. Uh, so it's eminent for us to actually also get knowledge about that or educate ourselves about global. Primarily, when we say global, there might be US, UK, which are like these are developed countries where most of the businesses actually want to expand because of the dollar terms and pound and other stuff. So, in today's topic, what we are actually going to cover is the tax structure on the particularly on the US side. We are actually going to cover that how to set up a company. But before setting up a company, it is important for us to understand what are the tax structures and types of taxes which are there in the US. What are the types of entities also? So before actually see what are the entities as well. And let's say similar to India, we have partnership, private limited companies there. Then there is the cooperatives. Now, along with that, what are the types of entities? What is the company incorporation process when we actually have to do it? And if we have to do it from India, how actually we have to do it? Taxation, and then primarily the taxation of various entities. If we see what are the types of entities and what would be the taxation entities, what are the compliances which they need to do it? And then for we being in India, there would be whenever we actually uh, have our own clients who are actually somewhere connected to the either be an individual who may be an HNI client, or maybe a company who may be holding something, or holding some shares, or some it may be a subsidiary here. What are the compliances which they need to do it on the US side? And overall, what would be the net opportunities for us as a chartered accountant in space? I see that I would start off with that there is a huge potential in going global. And actually maybe I would say that even government, or I would not say government as such, but the time actually whatever the time which has been last 3-4 years, where government is actually removing GST audit, and they are actually also increasing the limit of tax audit. It is forcing us to actually think beyond our own traditional way of thinking, that whether we actually want to go into only in the audit and assurance function. Maybe this will probably maybe an advisory function as well. So go into an advisory function. I see huge opportunity in terms of taxation and incorporation. When we say incorporation, and thereby there might be some accounting services will flow in as well. Now, to start with, as a USA as a country, first of all, I would say, see, if you see the tax structure, so US has a United State is a uh, quite a big country in terms of area, spread across East Coast and West Coast both, and it has 51 states. But the way it has been, each of these state has their own governing taxation. I'm not talking about the sales tax perspective, but even from an income tax perspective, they have their own taxation. So there, the structure how it is, basically it is federal, which is governing more like an IRS, which is CBDT. But then there is a state income tax, then there is a city level, and then there is a county level as well. Now in this chart, if you see out of 51 states, right, whenever the business is getting incorporated, uh, the red zone, right, the California, Illinois, Minnesota, or even on the New York and all, these are the least actually tax friendly state. When I say least tax friendly state, essentially mean when you incorporate, your cycle is little more because of the various state level and a county level and city level compliances which you need to do. When you have to do that, which or the documentation which you have to do, based on that, there would be a city level compliances are also there, which will increase your overheads. And in terms of tax rates as well, the tax rates and all, the state income tax rate, which varies between 3 to 8, 15%, these are also very high tax state. The most tax friendly, Nevada, Arkansas, Arizona, even Wyoming. So many of the company, Delaware. So many of the Indian company or Indian companies, when they incorporate, they either form mostly go in Wyoming, Nevada, because these are like least tax state. So they incorporate there. The reason for that is that overall, when we incorporate, we need to see whether there is a state compliance, because state income tax also has to be there. Now, state income tax, if they are not charging state income tax, that might be a better way for me or Florida, right? So I would incorporate in Florida rather than in, um, say, going in a California state, because California has its own perils of other compliances and tax rates as well. Now, the structure is, this is the structure overall: federal, state, city, and county. Types of taxes, if I say types of taxes, income tax is there. Income tax is your main direct tax, which is charged on the income of the entity or individual. Social security tax, which is more of a uh, uh, tax for retirement benefits, mostly probably for tax which is for their covering their social security of individual and businesses. Medicare tax, which is a health tax which they collect from businesses. Estate and gift tax, and sales tax. Now, estate and gift tax is nothing but on your property or inheritance, whatever is you are actually and we will cover it in the subsequent slide. On the subsequent on your primarily an estate which you are inheriting it, there would be some taxation which you need to pay it, maybe 1%. It's like a wealth tax, I would say. And gift tax is just a donor and donate whenever you are gifting one, maybe a shares or a property or so. It would be taxed on that. Sales tax is only primarily for, it would be applicable for all businesses, but for certain services it would be applicable. For so most of the goods is actually going to have sales tax, but the sales tax also, as we will see in the subsequent slide, it is primarily for it's a state driven phenomena. Rather, it's like our sales tax of 1999 2000, where India was having primary sales tax before even VAT, and it is governed by most of the counties and state. The types of entities, first of all, now let's see on that. Types of entities, individual as such, like types of entities as like it would be similar to how it is for India as well. It is similar to that. Individuals which are like a normal individual, salaried person, or a individual person with uh, some passive income of rental and other stuff like that. So individuals are there, proprietors are there. Proprietorship is nothing but your individual proprietorship, a sole proprietor. Limited liability partnership means all the LLPs, which is similar to how we are having LLPs. Limited liability companies. Now, limited liability companies and partnerships are both actually the same, except that LLPs are being formed for a specific purpose, which are primarily most of their professional or investment companies, either lawyers, professional, and investment companies. These are the three main kind of in, organizations or the verticals which will mostly go for limited liability partnership. Limited liability company is a company where it would have a, you are forming a part, it's a partnership only, but with a limited liability where you are having two members, three members, the number of members can be any, but it would have a limited liability of it's an LLC. And the advantage of the LLC is that even a foreign person can actually form an entity, and we'll see in the subsequent slide which kind of entity is right for when we are what are the key aspects which we should be considering while selecting a right kind of entity when we are forming A for India or B for US. Even for from US also we can actually directly, if the inquiry comes, we can actually form for a US business if they want to actually do it. So everything is possible on the online only. Corporations are private limited company only. It's like a regular corporation, which is called C corporation, and small corporation is for a limited set of companies or corporations, IRS, which is the Internal Revenue Service there, they have allowed that you can opt for, you form a corporation and you can opt for a small corporation. That mine is a small corporation, which is more like an MSME kind of thing, but I'm a small, in India also they have now like they have governed like a small company, right? They have said that 20 lakh or 20 crore would be a small company. They can opt for a small corporation. The taxation of that is slight, it is would be more or less very similar to how LLC will behave. From a corporation, if you opt for a small company, it will be very similar to how a small LLC will behave in that way. And then estate and trust are, if I form a non-corporate, a non-profit organization, I can actually have a trust registered for a specific purpose on that. So we covered about, we saw about type of taxes and what are the type of taxpayers, and let's see how the income tax rates before I move into the incorporation base or what kind of entities are there. The income tax rates, just from a, we are not going deep on that, but income tax rate generally varies from 10% to 37% depending on the status of taxpayer. And status of taxpayer is, you can file as single, married filing jointly, married filing separately, or head of household. Let me just touch upon the single. Single means you are, as an individual, you are filing return. Married filing jointly means me and my wife, if I am having, if we both are filing the returns, we both can file together one return, which essentially means my standard deduction and my exemption limit would be higher. To give just an example, that we in India we are having 250,000 is the basic limit, and then up to 500,000, which is there is some rebate given. Now, if I actually, me and my wife are filing jointly, if those kind of scenarios there, then our limit will go up to 10 lakh. So up to 10 lakh, I will not pay tax kind of thing. So similar, there is a standard deductions there also, and there are basic exemption and standard deduction, which would increase. So you can file jointly to get an advantage of a higher basic exemption and higher standard deduction. Married filing separately, depending on the scenario, I can actually choose to file separately also. Most of the people file married filing jointly because there would be an exemption, exemption limit would be higher, and also standard deduction would be higher in that. And head of household is nothing, I would you can compare that head of household with it's a karta or a HUF kind of a. So that is a scenario in that. So these are the type of taxpayers, and tax rates, actually tax rates are same. The slabs and deductions which are there on based on those type of taxpayers is different. For head of house, we can add, so I'll park that question, but to answer this one, head of household is a separate entity. There is a separate exemption, but that exemption would not be double, but it would be 1.5 of whatever is single is available. So consider this head of household will be always lying between single and married filing jointly. Would be like that. We can actually take up the questions at the end for, because there are virtual also people are there. That's why. And as far as capital gain is concerned, the capital gain is also taxed at a special rate between 0, 15, and 20. And state income tax, as I said, right, 0 to 15%. California has 15%, which is maximum. So if you are having a company in California, you will end up paying, and as if you are, there is a regular corporation, then you will end up most, and then if the federal tax rate is for corporation is 21%. If you are a proprietor or individual, then it can go up to 35 up to 37%. Over and above that, 15%. So half of your income will go in taxes as a proprietor also. So federal, if it is a regular corporation, 21%. Here is one more thing on the partnership and small corporation. Small corporation and partnership, they actually have, so these are the entities, right? So small corporation, as is called a S corporation or small company, they call it, right? No income tax, as it is they are a pass-through entity. So income would be taxed at an individual shareholder level. So if your profit, say for example, for a company, if you are a regular company, 100,000 is your gross income or receipt. 80,000 is your expenses. So 20,000, on 20,000 you will have 21% tax. But if you are a small corporation, that 20,000 will be going to individual level, individual shareholders. So let's say, for example, only one shareholder is there or two shareholders, let's say. So then it will go as for 20,000 would go as 10,000, 10,000 between two shareholders. If it is one shareholder, it will go into 10,000, and that will go as there is actually a specific form which will cover, it's Schedule K1. That will come to individual shareholders. So when he files his personal return, it would be taxed, which is unlike India, wherein if you see similar to the same treatment is for partnership. In India, the share of partnership pays tax, and share of profit which comes after that is exempt. So we show the share of profit. There we have to show share of profit which is taxable in their individual. But the company will not pay tax. The company will, or S corporation partnership will not pay tax. And on the federal, the estate and trust, which is cooperative, they actually, cooperative is like a non-profit organization. Is if you want to take in tax exemption, then that would be like a 5001. There is a specific section covered by that. It's like a section 8 Nidhi Company. But if you like a normal private trust, that would, the taxation would be like how in AOP is in India, how AOPs behave in that one. It would be like that. And state is varied as per the regular whatever state regulation. So, social security tax is a tax contributed by employer. This tax is used to pay for the benefits, and the rate for this is 6.2 for employer and 6.2 for employee. And Medicare is the health tax, which is Medicare tax, right? It's basically 1.45 and 1.45. Self-employed, right? So self-employed who are proprietors, they also pay the same social security and Medicare tax as a self-employment tax. The reason for that is that if most of the time social security and Medicare are captured or are taxed at the time when you are paying a salary. When you are paying salary, social security and Medicare is charged at 6.2 and 6.2, similar to how our PF behaves. But if for a sole proprietor, there is no salary. So if I am a sole proprietor, the same example, if I take 100,000 and 80,000 is my gross receipt of 100,000, 80,000 is my expenses. On 20,000, 20,000 is my net profit. So on that 20,000, I have to actually pay a self-employment tax also. Apart from income tax, I have to pay self-employment tax also, because that there's a formula on that. But on that, I have to pay the self-employment tax because 20,000 is my salary. Actually, in a way, 20,000 is my salary. So that's why self-employment pay self-employment, but that is called self-employment tax in that case. Estate tax and gift tax. Gift tax is levied on the donor. Unlike here, it is donee, but and charged at a federal and some state levels. Estate is all federal and state both, and it's on the transfer of property as inheritance, right? To be paid by estate and not the beneficiary. It is paid to be paid by estate. And here is one on the sales tax, as I said right earlier. So these are like the chart shows which all states has what are their sales tax rate. These are sales tax rate for sales tax rate is like GST rate, or erstwhile they are still on the sales tax only, but each state governs their own sales regulation, and we have to file monthly tax returns. Tax rates vary monthly or quarterly depending on whatever that turnover or that tax liability or turnover is. So this chart says about all the states which we are in. Here also you will see that based on this also, if you see 8.25. So we are generally the tax varies from 3% to 9%, but most of the people who are on that 8%, 9% states, right? These are the highly, we call it them not so tax friendly states in that way, because even the sales tax is higher, your income tax is higher than city, and you have to also overhead of city and county tax are also there. So that's why this is more on the sales tax. And the income tax, as far as taxation is concerned, the tax on which jurisdiction for US citizen and businesses resident, it is charged on the global income. Even for a corporation which is formed, you have to actually incorporate the global thing as well. Foreign tax credit can be claimed if whatever tax you have paid in the foreign countries, you can claim it, but that would be on a whatever the treaty is, DTA agreement is. Non-resident are taxed only for income accrued in the US. So we saw in the first chart, out of 51 states, it is charged at a federal level. Then there is a state also income tax is there. However, there are 7 states where income tax is not levied, which is Texas, Florida, Nevada, Wyoming, South Dakota, Alaska, and Washington. These are the 7 states where taxation state income tax is not there. So if anyone is in Florida or Nevada or Wyoming, most of the people here I have seen like 60%. Delaware also has their own tax, but Delaware, what it says is that Delaware is good tax state or tax friendly state for forming an LLC or a corporation for a foreign corporation, right? It allows that, but as far as Delaware is concerned, state income tax is still there. It is 3%, but state income tax is still there on that one. Unlike Wyoming or Nevada, where you don't have anything on that one, there is a zero tax. Means that you don't need to even file the taxation also. There is no filing requirement for that particular thing. Income tax. Sales tax is Delaware. No, Delaware has sales tax, but it's on goods, not on services. On services,
State tax. What's the tax in
state tax. Delaware has state tax. State filing you have to do. State income tax is also there, which is it is lower, but most of the, as I said, right, most of the companies or companies in India, when they form or expand, they either prefer LLC will prefer this one, Delaware. The reason primary for is the more of the friendly, I would say, the incorporation process and all is very fast there. The least requirement on that one is when we say the requirement, documentation requirement, and the foreign, actually the foreign shareholder requirement and all is minimal. So you actually have what they say is that any foreign member as a Indian company, as a single person from India, I can form in Delaware. True in Wyoming also, but Wyoming needs to have that. Okay, then you need a registered agent, which is there in the Delaware as well. But then they have their own other requirements for other states. But Wyoming, Delaware, Florida, and Nevada. These are the 4 states where most of the Indian companies or Indian, when they expand, they actually incorporate. Obviously, for the business reasons, if you have to do it in California, you have to do it. Say for example, yeah, they don't make it public on that one. Yes, yes. And for example, most of these Y Combinator startups in India, right? Or when they get like when they get in Sequoia or Y Combinator, Sequoia Search, they actually insist, or I would say they compel most of the companies to form a company in the US. And that is also in California. So their registered agent or a registered company address would be in that fund. So whatever that compliances would be, where there are circumstances wherein you end up actually forming a company in Delaware, but what will happen is in future, right? As you get an investment, say Tiger Global or some other Marcus Venture or Akaram Venture, they will say that why don't you incorporate it in California also? That is more of the that is more on the need base, and that is more of a compulsion which they will form, because they would do businesses also afterwards in California. But these are 7 states primarily which there is no state income tax.
But C corp, if you are having suppose if I want to go for California, whether I should once more register?
Yeah, that's there. You have to actually if you're yeah, we can actually LLC can be converted into C corp and S corp. Yeah, we'll take up the questions on that. Sure. Now, incorporation process. Now, if you see the incorporation process, we have to actually, these are the steps which I would generally follow on that. No? The selecting the right kind of type of entity, which we know that there are four type entity: proprietorship, partnership, and uh, S corp and C corp, which is LLC, C corp, and S corp. Finding a registered agent or authorized representative for the state, incorporating a company, with all the documentation of bylaws and other stuff, which objects and bylaw, obtaining a federal employee identification number, which is nothing but a PAN number, opening up a bank account, starting the operation, monthly and quarterly compliance and annual compliances with federal and state authorities. Now, selecting the right type of entity, first of all, we need to see that what is the when we are advising client, right? Well, anyone who comes in. So it may be that client himself has done his due diligence or advisory and saying that I want to form a C corp. Or they may come out that I want to form a company, but what is the right structure? If you see proprietorship, LLC, S corp, and C corp. Now, if based on this chart, if you see limited liability, proprietorship does not have a limited liability. LLC, S corp, and C corp has a limited liability to the extent of your partner contribution or members' capital or share capital. Maximum number in proprietorship is one. LLC is no limit. For a small company or a small company, which is for a small company to form, you have to actually first form a corporation regularly, and then you can opt for a small company. That is actually up to 100 members you can actually have. Can be owned by non-US citizen. Based on this, right? You for a non-US citizen, there is only two options: either a regular corporation or a S corp or a LLC. S corporation needs to have a US shareholder or a US share resident or that one. So S corporation, we cannot, even you form a regular corporation, you cannot actually opt for a small corporation because it needs a US resident. Now, can be owned by other business entities? Yes, all the can be owned by a business entity or another corporation. LLC also can have a C corporation as a member or so on that. Income is taxed, can have more than one class of stocks or ownership. S corporation cannot have. So which essentially means if I have to issue shares or preference shares and all, S corporation is not an option. LLC is an option, but LLC is more for it may not have shares, but LLC will have ownership interest, right? I may be owning 2% or so. So most of these venture companies, which are actually venture capitalists like the Westbridge Capital or Coastla Ventures and all other whatever you call it ventures, they will have either an LLC, and within that they will be having a share or an interest of that one, that I am owning 0.1% of that or 2% of that. So they will generally have a limited fund, and then there are partners which are there, which each of those HNIs which they contribute to. But for a regular any company who want to do business in the US with funding round, or they want to grow and give ESOPs and other stuff, then C corp is a default choice. But to come to that level, right, you have to actually, if we put it in the chart, then probably will come into it. Otherwise, what will happen is that they may form an LLC and then convert into the same question. Like they will start with LLC, but as they see that we want to grow, we'll go into LLC, into a C corp. And tax C corp can be anyone. Yeah, regular for a corporation can be like I as an individual or I as a company can actually own 100% in my C corp, form with a 100% share capital. But to convert into an S corp, I need a US resident. So otherwise it would be a regular C corp. Owners can deduct losses. If you see, the owners can deduct losses on their personal tax return. Most of the except for C corporation, because C corporation itself is taxable. Others are actually taxed at a individual level. So I may get from LLC and S corporation, I would the same example of 20,000, 10,000, 10,000. My income is there, but I may be having some personal loss. ultimately it is all my total income, and I can set off the loss against that because it is taxed at an individual level. It is considered as a business income only. Income tax deadline for each of them, proprietorship is 15th, LLC is 15th March, S corporation is 15th March, and regular corporation is 15th April. If it is falling on a weekend, then it would be the corresponding Monday or that, which was actually 18th April was the deadline for those. Automatic extension is available for all. You can actually file for extension, and 6 months deadline extension will be coming in. Just like in India, we have there is a 234F late filing fee. You can still file after 31st July or 30th September, but there might be some late filing fees. Here you have to file, you can actually, as long as your tax is paid, then you can automatically file. The window closes from 15th April to 15th September, 15th October, and 15th March to 15th September. It moves there with a 6 month extension. If there is a tax due, there might be some interest which will come in. If there is no tax due, no interest and no late fee or something. Federal and state. So when you file for federal, you get automatic state extension, except for 2-3 states like New Jersey, California, and Maryland, where you have to file separately as well, extension. Otherwise, most of the time when you file for a federal extension, your state or extension goes through. It is it. No, 50. No, it is for it is 15th of April. It is 15th of April. Last year it was 15th of July. The reason for that was COVID. They had given a general extension.
And how India, like, we don't file on loss and be guided.
Yeah, so losses can be carried forward up to 10 years.
So here the like file for extension.
Yeah, then also you can actually carry forward. So there is no like you that belated return, you cannot carry forward loss. It is not like you can carry forward with a belated return. Issue of shares like issue of only in C corporation it would be possible, in not in proprietorship. And income tax form which is to be filed, there is 10 Schedule C, which is general individual return only, but there is a separate proprietorship form kind of thing. So it's a ITR 3. I would say 1040 Schedule C is nothing but ITR 3. LLC is 1065 is considered like ITR 5, and S corporation is also like ITR 5 only. ITR 6, it's ITR 6, I would say. ITR 6, which behaves like ITR 5, and C corp is also ITR 6 only. And the key aspects of these of the taxation on these entities is annual income tax return to be filed to report all the income for individuals. Partnerships and LLCs are pass-through entity as we discussed. Plus, there would be an annual reporting which we need to file with the state level. Say, for example, Delaware state or even Nevada state or Florida. Even though there is no state income tax, I still, because I have registered that in that state, I need to file an annual report, which is consider this as a MGT7. MGT7, which is more of your shareholder information, any changes in the shareholder information, yes or no. And then you file a fee, like here we pay 300 fee, that ranges would be from $75 to $200 in that one. It's just to keep your corporation status active. Otherwise, it will go into a suspended mode. So that is for each of these LLCs, small corporation or regular corporation, they have to file an annual report, which is annual report is nothing to do with IRS. It is just your own information about your information that any shareholder change happened. What is your share capital at the end of the number of shares if it is a corporation, and who are the shareholder, who is the officer change or so. That's an estate and trust also file a 1041 taxation form. We talked about in that chart only, but here this is more making it more easier on that. That individuals, they file 1040 NR, which is a non-resident. Easy is ITR 1. 1040 is ITR 2. Easy means they like a Sugam or Saral, they have, if only you are having salary income, then it might be like just an easy also. Deadline is 15th April. Partnership and LLCs, the deadline is 15th March with the 6 month extension. Small corporation and corporation, right? It's 1120S and 1120. The 1120 is your main form, which is your ITR 6. 1120S is your ITR 6 only, but it's like called small corporation, but it is not taxed. So in your corporation and small corporation, the difference primarily is that I would put this two as cousins, partnership and LLCs and small corporations. Corporation is a separate entity in itself, which is taxed at a 21%. And for estate interest, you are filing 1041. Now, before I move into the taxation aspects, I will just again summarize on the incorporation process. That we select the right kind of entity, which is either LLC, S corp, based on that chart which we saw, right? Then the next step for that is you find a registered. It is the state will ask that where is your office in Delaware, or where is your office in Wyoming or so. So then there would be, you need to find, if you are having an office, you take on lease or virtual or something like that. Similar to how in Bangalore we are seeing virtual offices. So there are virtual offices who will be giving on rent for an annual thing. So you find a registered agent who would be like that, or an authorized representative if we are already having a friend or someone who is actually willing to put his name on that. Then comes the process of incorporation. Now, incorporation, like what we call like spice form or so, right? There would be, each state has their own forms. You need to be clear with the object of the company, who are the shareholders, what is the articles and bylaws. And once we file that, within probably 2 to 3 weeks time, you actually get a incorporation thing. Most of the time is like 2 to 4 weeks is the leave. That one. Once the incorporation is done, you get a certificate from Delaware, Florida, whichever state, California state or so. After that, you actually have to file an FEIN number. FEIN number is the application for a PAN number with the IRS. Once PAN number is allotted, then you actually open up a bank account. This is for a new company. Yeah. And then you start the operation. Then there are monthly quarter. Let's say you may be hiring some contractors, you may be hiring some employees. Then you need to have those specific forms which need to be filed. Whenever New York and California has a requirement that whenever you are hiring a new employee, you need to inform IRS, the state Department of Employee, Department of Labor or so. You need to have. So those are compliances which are there. Which may be one is on monthly, and then there are quarterly compliances like PDS and other stuff which we are actually having, like withholding. You make the payment and then you file quarterly basis, and then there are annual compliances also are there. Annual compliances which we saw on the income tax side, ROC, which is the corporation at the state level side, state secretary of state they call it. To make it more easier, like there is a state income tax which is IRS, and then there is a secretary of state which is MCA. You can consider it like that. Director requirement is there. So director requirement is there, but the director, what you can actually is there is primarily is when you are incorporating a company and then you are making the bylaws. For a company, there would be directors. For LLC, there would be members. The shareholders would be so you have to actually, when you are incorporating those bylaws, you have to put in that this is the director and these are, and then bank account also, resolutions and all will flow through that. So this is the incorporation process, and then the taxation issues related to that. Now we cover on that. I'll go some of the terminologies on that one. SSN number, right? SSN number is for FEIN. We saw Federal Employer Identification Number is nothing but a PAN number for a companies. Social Security number is the PAN number for individuals. And every individual and resident should have that one. If there is a global person, right? Global in the sense, I as an individual want to do some business and there is a requirement there for opening up a bank account and or to operate a bank account, right? I would need a SSN number there. Now SSN number, I don't have it. Say, for example, I am there, but I don't have it. What would I rely on? I would rely on some of my known person, maybe acquaintance or a friend, to open up that if they are okay in that. Otherwise, I have to take an ITIN number, which is it's like individual tax identification number. By filing a form called W7, you can actually take a ITIN number. That ITIN number is for it's the same social security number, but for people, it's not your SSN, but it's more your identification number for tax for IRS to do it. SSN number is valid like across for your it's Aadhaar, but here ITIN number is only just a for income tax or from a IRS perspective, it is applicable for that. So you take an ITIN number on that.
So non-resident won't be able to bank on.
Non-resident would not be able to open up a bank account. There are few banks who are actually now allowing remotely also, but still you need to have an ITIN number. Otherwise, so their Bank of America, Wells Fargo, they actually are asking that person to come physically and sign it. So those are, but then what invariably most of the companies do is that they either have their own known person who will go and act on their behalf initially and sign it and then open up the bank account. And then once you have the online credentials, you will be able to open it. You can operate it from here.
It can also not be given to foreign national.
ITIN can be given to foreign national. Any foreign national, for foreign national, if he is a US resident, he will have SSN. If he is not having SSN, which means, let's say, as a foreign national, I am not having SSN, then I can actually apply for ITIN. Now, let us, we saw about the incorporation process. On going on the income tax side, right? We saw which are the forms which are 1040 for individuals, which is proprietors. Then there is 1065, which is ITR 5, 6. So let's go into ITR 3, 5, 6 of US and what all it contains and primarily, which are would be we need to file. So 1040 is an annual income tax return to be filed by resident or non-resident deriving income from US. It should be filed by 15th April. As we said, it can be filed like single, jointly, or as a head of household. Key parts of that, if I see key parts of this is like individual information you need to. So there are major 8 parts. One is individual information about all your name, address, SSN and all. Filing status, you need to decide whether it is single, I'm filing as single, or I'm filing as married, or I'm filing as who are my dependents, because based on if I am having 4 kids also, each or my parents as well, if I'm supporting them and they are not, I can club them, and what will happen is that based on that, exemption and standard deduction will increase for each of them. And what are the sources of income? Source of income are very similar to how India behaves as well: salary, interest, dividend. So how India has salary, house property, business, capital gain, and other sources. There it will start with salary, interest and dividend, which is other sources, capital gain, rental income, and business, which is share of profit on that. Share of profit. So that is coming as in the flow. In the flow, it comes like that. Deductions you actually get all for retirement contribution, like NPS contribution we are making, or some educator expenses which I did for my family, my own mortgage interest. Those are all deductions which are coming in. And then there are itemized deduction and credit which are coming, like mortgage interest, donation, child tax credit. If I am paying for, if I am having a child less than 14-year-old, I get a credit also, tax credit, which is our similar, if we have there, the concept is deduction is also there, chapter 6A deduction, and then rebate under section 88, which was actually there after tax, that is also available. So there are both things are there in that form. And other taxes is self-employment taxes is proprietor. Self-employment tax, as I said, is nothing but your social security tax for a profits on your individual proprietary income, and then you make the payment. This is the form. If you see, the form contains a, if you see, this is the first part: filing status, name, standard deduction, dependent information, and then we see that wages and salaries, and each of them will have supporting HL. Now let's see how on the 1065, which is partnership and LLC, behaves. LLC, it is by limited liability partnership and limited liability companies. Both annually file this 1065 form. Due date is 15th March. You get an extension up to 15th September by 6-month automatic extension. And it is an information return. So primarily, if you see, because it does not, irrespective of your LLC is earning 1 million or 10 million or even $10, they would be filing this as an information return. It is not filing them as a, like there would be no tax on that. The $10 or $100 or $1 million would be distributed among partners or shareholders. And this is actually for the same form for S corporation, 1120S we'll actually see. But this form, it would be distributed among partners or members. Now, that members will get a form called Schedule K1. K1, if you see, K1 is nothing but a share of profit from firm, is the form which we, in India, we are having share of profit. We don't issue a form, but they issue a form which act as a 16A or something like that for them, to treat it in the individual level. Key information in this one is business information, income and expense, Schedule L balance sheet, and Schedule M1 and M2 is for book profit to tax profit. Whatever depreciation, temporary and timing differences are there, permanent and like temporary timing differences, that would be Schedule M1. It's a reconciliation of book to tax profit, whatever is as per book and whatever income tax, and Schedule K1. Here is your 1065 form. It has name of partnership, principal business activity. There is a code given for that, principal business activity, which form. It's similar to how we are also having that source of 16102 professionals and all other stuff like that. 1 to 21,000 code which are there. Here, there also one, I think 55,000 codes are there given on the.
So cost to maintain from the income tax cost and other income company tax cost, like allowable, disallowable expense.
Yes, there would be. There are certain, as per books of account, but certain items which are not allowable as per income tax. Or then there is a depreciation method which you are following as per books, which may be as per GAAP. But income tax says that you can actually allow accelerated recovery cost system or SLM and WDV, right? So they can actually have that. Depreciation would be there. There are certain disallowable expenses like personal meals and entertainment, which are personal. You may have booked it, but as per book profit, it may be 10,000, but allowable is 5,000. So that is where the Schedule M1 comes in. M1 is a part of that only. But
Cost to release the information on a tax return. Keep along with that allowable.
yes. So my out of 100,000, same example again, 80,000 is my profit as per so 20,000. But there were certain 2,000 which was non-deductible expense or so. So I would add that, and then my profit will become 22,000. Tax profit will become 22,000, and 22,000 will be divided among two shareholders or two members to get it 11,000 in my individual income. Same K1 would be issued. So similarly for 1120, right? 1120 form is a regular corporation tax form. It's ITR 6 only. To be filed by 15th April with a 6-month extension. It also contains business information, income and expense, balance sheet, M1, K. So all three, 1065, 1120S and 1120, the three forms. All the forms would be similar except that 1120 form, right, is more on the tax payment as well. There would be no K1. 1065 and 1120 are like kind of very similar form. It's the same form only. It was 1065, 1120. You will not be able to even, if I remove the name from 1065, like the header is not, you will not be able to even bifurcate except that there would be members and shareholders. That would be the only difference which you will get. So 1120 form will have a 21% tax payment also has to be there. So if you see this form, otherwise the first main crux of the form is basically profit and loss and balance sheet. You are entering all the profit and loss balance sheet, and you are also entering about information about shareholders. Who are the shareholders? What, and in all the three forms, you are also entering about book profit to tax profit. What are the deductibles? What are not deductibles? Or there is a depreciation difference. There is a provision difference for a regular corporation. And here are the other tax forms. When I say other tax forms, W2, this is just for information purpose on what are the forms which are. W2 is reporting wages and salaries. And these are all when the company incorporate annual compliances which are there on the taxation side. Right? Every employer or business incorporation has to do a W2 form which reports wages and salary. It is form 16. 1099 interest, 1099 dividend, 1099B is reports capital gain on sale and purchase, unemployment income, retirement income, 1099 miscellaneous reports, miscellaneous reports, commission, royalty or rental income, 1099 NEC reports, consulting income. So 1099, consider that as for form 16A. Form 16A with 194G, 194C each. So we have 194A, Form 16A, where the section would be mentioned as 194A or C. Here they have like 1099 interest, 1099 dividend, 1099B, which is capital gain, 1099G, which is unemployment income. If you are unemployed, they get it unemployment, or consulting income. Primarily, most of the corporation will encounter this two, which would be W2 and 1099 miscellaneous and 1099 NEC. NEC has been like form has been since 2-3 years, I think 2 years, 2020 and 21 both. Yeah, it is since 2 years. So what they did was earlier 1099 miscellaneous contained that information also, but they have separated out all the contractors or consulting income, right? And they have said that this has to be found. Schedule K1 we saw foreign income, share of income received by partner or shareholder. W9 is the request for employer identification number. W7 is the ITIN. And this form, most of the Indian clients also you would have encountered, which is called W8 Ben or W8 Ben E, is that whenever a person, a US customer or a client or a US entity is making payment outside of US, they need to withhold tax. But if they are not withholding tax, if they don't want to withhold tax, they need to take from a foreign entity or a foreign individual that what is your status. A request for a non-US person statement that he is a non-resident of US to report information to IIS. So most of the time W8 Ben E would be, so we have many clients where they do business in US. Now, when the business person is making, the other client is making payment to Indian entity, they say that why don't actually you give, this is the form we would need a W8 Ben E form, which is like a long list of form, like 8-9 pages. But there would be few situation, only a few application you have to do that. I certify that I am a non-US resident or a non-US entity, not involved in financial or anything like that. And you certify that I have been, there is a DTA between this to this, US and India under article thing. So no deduction is required. You would be paying here only. So that is 5472 also would be applicable for many of the company which are related to India to US or India to US or US India as well, or vice versa. Is basically information by a foreign owned corporation. So let's say, for example, if I am actually forming a company in US, which I am holding here, so that means I have to actually, US says, okay, hey, you probably are filing 1120, that is okay. You need to also give me the information about your foreign company, what are the gross receipts. This is just an information return, but you still need to file it as in from a disclosure perspective. So that is the 5472. This is the additional requirement. And these are the forms which are there, W2, 1099. This is just a sample form. And if I see comparison with India and on the US side, right? India follows, say the US follows the calendar year. India follows the financial year, which is March. Due date in India is actually coming into 15th April to, say US is 15th March and 15th April. India is 31st July and 30th September for audit and companies as well. Income tax return to be filed, as I said, right, 1040, YTR 1234, or ITR 5 and 6, which is 1120 and 1065 equivalent. unique identification number in India, PAN, SSN number there. Form received by employer, W2, that we saw is Form 16. 1099 is 16A. Tax calculation structure is income minus deduction, tax credit, and withholding payment. As I said, right, Chapter 6A and tax credits under rebate under Section 88 is only for because I did when I was doing my internship, there was rebate under Section 88. I think it got removed after 2005-6 or 4, I think 2004 or so. But until that time, it was there. Extension is available. Here also extension is available, but there is a late fee of 1,000, 5,000 or 10,000. Income tax authority is income tax department only, and website, as I say, IRS is there. Filing status, India we file individually. There is an option to file jointly also. I have to summarize on this particular thing, right? On incorporated and taxation thing. Selecting the right kind of entity is essential. Corporation, regular corporation is if you want to start and bootstrap it, LLC may be a better way to advise client that LLC will be, if it especially if the IT services company. If it is a product company, which they probably want to do on a subscription basis or so, product companies I generally advise go for C corporation because they will anyways go for funding and other stuff at that point of time. Otherwise, they have to LLC to thing would become. Registered agent is required. Select the state which is more tax friendly, which are more on the say Delaware, Nevada, Wyoming, unless and until compulsion is there from the investor to form. And to answer your question, once your corporation is formed in Delaware, if you there are a situation wherein if you have to do, we have few clients wherein when they want to form a like they want to do business in California or even other state like Arizona, they actually have to register. They have to register there. They have to register. So they would be registering as a foreign corporation for that particular foreign corporation. When I say is not a, it's not that you cannot do business there, but it is a requirement from the client side that your company should be registered here. I will do the business with you irrespective of, say, there would be one client would say that I would do business with you irrespective of where you are in California or in Wyoming. Some clients will, many of the government in government contracts, and if you are actually doing some company, that's just like investor company. I would do business with you. I would invest you if your incorporation is here. So you actually register as a separate. So you will have a California number also, and you will have a Delaware number.
Same company.
But your FEIN number would be same.
Same company.
Yes, it's just like GST registration. We are doing it in that way. It's like that. Yes. So you have to actually same company only. FEIN would be same, but you will have a separate file number. You are registering with the Secretary of State. It's like ROC Karnataka, ROC Mumbai, like that. That way.
So if you're a good-based company, then you have to register.
Correct. Yes. If you're goods based, then you have to actually service based does not matter, but goods based means you have to actually register only there because sales tax and all also will apply. Share of profit from a small corporation is taxable at an individual hand. When corporation, regular corporation pays 21%. Sales tax varies from state to state between 3 to 8.5%. And US citizen have to report foreign bank account and investment held separately. So one of the thing about US citizen who are having abroad, right, accounts here. Many of the non-resident would be having accounts here. They need to file two main forms, which is which we are actually going to cover in this tax compliance. Is like there's a foreign bank account reporting form called FBAR. This you need to file it online. We can actually, most of the HNI clients here are non-resident. Many of the techies here who have come, stayed in US and become citizen, they have now shifted here. They all file, they have to file this particular form called FBAR, which is nothing but your bank account held by US citizen or resident in foreign country, like type of account, account number, maximum account balance held. This has to be filed with the Treasury Department.
It is to be filed by a resident in US but having bank account outside US.
Yes, a resident or a citizen. If you see in Bangalore, you will have many of the people who were staying there. They have moved here, but they are still US resident or US citizens. So they file this particular form along with the tax return. Along with the tax return, they file this particular form. And
Here also,
yeah, NRIs file this.
have income from and has assets outside India, especially
Correct. We say that how.
yeah, highest amount and
Correct. In our form of Schedule FLA, foreign asset, FA, Schedule FA. Yeah, FA is there. It is different matter that most of the people are not filing that way as such, but here there is a FBAR requirement is there.
Finland will not allow you unless you
Fill it. Yeah. So this maximum account balance held, the only requirement is that your total cumulative balance should be more than $10,000 at any given point of time. Then you need to file it. Otherwise, you don't need to file. Similarly, many of the people who are having, it's called passive foreign investment compliance. It's called Form 8621. This is also annual form submitted by person who is a direct or indirect shareholder of a company. So if he is holding some mutual fund also, so they have to report it this one: name of investment, company or fund, net asset value at the beginning, at the end of the year, realized gain and unrealized gain. This 8621 form has to be also filed. The requirement for this is that it should be your total cumulative asset should be more than $150,000. Then you actually have to file. Like if your asset at NAV total hold is more than 150,000 at the end of like during the any time of the year, then you have to file this 8621. And this is also tax compliance for it. Now coming on to the opportunities, right? As I said, right, there are two big opportunities which I see. One is incorporation services. Incorporation services, the reason, as I said at the beginning also, that we as a chartered accountant, right, we are seeing the clients are now because of the there are, I let me put it this way, there are the biggest in the last 150 years, right? I would say there are two main innovations which has happened. One is electricity and second is internet. Now internet, because of the internet in last 30 years or so we have seen and last 10 years, in the last decade, we are actually seeing the way communication and technology has brought us together, and like it's an interconnected world now. We are seeing businesses being done across the world, like people exporting here also. I was recently in Gujarat. I hail from Ahmedabad. There was actually a small snack shop only, which was maybe doing a turnover maybe a 1.15 CR. Last 6-7 years after this, all this site and website and all this technology boom has happened, they have taken export license and they have taken a like did an incorporation in US, and they are now actually doing in for them they have done an incorporation which is more of a distribution now. But they are doing 150 CR in this selling khakras and snacks and all this kind of stuff which you see. Obviously, there is a population also for consumption there, but they are actually, I have not seen like a growth of that. Now, for if you see the way world for them is like nothing, like within 7 days it will reach. If that earlier we way back when my father was actually, he was telling that he was going to Visakhapatnam, Vijayawada for taking orders of saris and other stuff, right? So it used to take him like he was traveling by train and like, okay, you take order 7 days or 15 days, we take the order and then 15 days we'll deliver it. Now 15 days, they actually within 7 days they can actually deliver it. So that is how the technology is being. And we as a CA, right, as a professional chartered accountant, we are advisors to client. We it is for us now to actually take global, because they are doing businesses in global. Why not actually we, and their main base is here, why not we actually help them in expanding globally, which will also in turn help us growing practice as well, and thinking some other stuff. And that will also educating ourselves about global side will help us getting some collaboration from that side as well. So it is win-win situation for even that holds true for the US CPAs as well, that they also need to go global as well. But when we see incorporation services, bookkeeping services has been being done for long. I see now across the world, like it's not only US, Australia, UK, even from Africa also, Western, particularly Eastern Africa side. They're all looking for partners who can actually get the work done at a problem. One is that taking arbitrage, cost arbitrage, but B is that if you see the cycle, if I put it here, the from our side as well, I will go to this part. See, the due date of in the US is 15th April. In India is July. So we can actually keep on running for the entire day, right? Most of the can keep on busy, even though GST and all has kept us busy most of the time, but it may not be that much remunerative in terms as compared to how the US will come in. So accounting and reporting, individual tax return and business tax return. If we incorporate, that is incorporation is the main source, I would say. Through that, we'll actually always get it. Right? So individual tax return, business tax return, this is the next big thing which I have, because right now most of the if I see in India, the work which is being done in various parts, bookkeeping is there, and bookkeeping has its own arbitrage. In US also, people you say that okay, we will charge $15, $20, but it's we time for as a chartered accountant, I would see that the value is more on the moving up the value chain, giving A is incorporating and then reporting where you are actually standing, like analysis and other stuff, and on the tax return side. That is the main opportunities for us to tap into. And post COVID, right? I have seen that US, Australia, UK, they have opened up, and they are actually now readily, and technology has also helped. And the third, which I feel that the third after the two main innovations, there is actually metaverse. If you see, the metaverse is coming up, which would be the big thing like internet. That is the next decade, which I particularly foresee is that metaverse is nothing but a virtual world wherein we both are actually interacting. Right now, we are actually interacting on a video conference. There are virtual delegates who are actually attending this, but they will actually attend it in next 2 years. They will attend this particular conference as if they are sitting right here in this particular thing. They would be able to feel it. Everything is like that. That's how metaverse is changing the world of internet. Through internet, I would say. And with 5, obviously it needs to have 5G as it goes into 5G. So that means, having said that, uh, a client sitting in the US or a CPA sitting in how far it would be that we are actually both interacting in the same room. It's a clone coming up, and so those kind of stuff which will help in the next decade. So it is up to us to actually now get into a interconnected world and adopt that reality, that we educate ourselves on a global tax, primarily to start with 1 or 2 countries where it may be more prominent presence of our businesses or client would be, uh, and then enable technology, or I would say, and then expand that globally. That's I would actually educate on the global tax or global taxes. I would say global businesses. I would say global compliances, and that will help us expand globally. And then we will truly be like a global professional. The time is there for like global professionally. In our one of our a couple of months back only in one of the seminar, our past president Kamlesh Vikamsi was also telling that we have to be like a digital chartered accountant, which would be serving globally. He says that I don't see no reason, and we are actually the as far as our skill set, he has met. He said in his tenure, he has met so many chartered accountant or accounting professionals across the globe. That our talent is second to none, our skill set. So we, and why we can't serve sitting in Mumbai, we can't serve New York, or even I would say sitting in. There are, I think, Kota sir was also telling me that in Udupi and Sirsi, there are actually people who are serving to US. Yes, so they are actually serving that. So that, having said that, we have live people who are working on that. It's for us now. We actually educate ourselves, enable using technology. We serve that one. So that is a big opportunity which I see for chart accountant ahead in that. So that's what I wanted to cover. Any questions if you have, we can yeah.
Regarding the incorporation, where when not when it's an option corporate entity, he has only the option of C corporate.
C Corp and LLC also.
Let's say the path through person not paying a tax return is your path through.
Then you have to take an IT. IT number you have to take it on. It's a pass through. So what will happen is if you are not having an LLC, so if you are not having a SSN, it's a pass through, means that income will, you have to, if you take an ITIN, you can just file the return with an ITIN number, but as a non-resident. And then your income would be mainly reported in India only.
The taxability only restricted.
Yes, yes.
And there's an concept you said like percentage.
Yeah.
Like, then we will want to incorporate entity.
Local
Be
person.
friend of can be private
Yes,
person.
yes, yes.
Has to be from the particular state or it can be from a different state also. Suppose
It has, so if you are in Delaware, then it has to be from Delaware.
is it the mandate?
Yes, yes.
Is it a local person condition, it's a mandate requirement?
Local, so registered office, so when we say registered representative, is a mandate from the secretary of that. So that wherever we are incorporating,
Any states in.
any state, so what will happen is that if you I have decided in Delaware, or I have decided in Nevada, or Wyoming also. So Wyoming means I need to have someone in Wyoming who can actually help me in this. So a local person who is actually sitting in California, he may not be able to help me because his address and all would be of California. So Wyoming will, because I need a, see, I incorporated ABC INC or ABC LLC. But what is the address of that in Wyoming? You want to. But there are, as I said, right here, if I want to open up an office in Bangalore, but I don't have, but then there is companies like WeWork or what is that? Over.
We cannot register office. The company that doesn't allow additional place as a virtual office. You need to have a physical office for your incorporation purposes and the registered office cannot be virtual.
Correct. Registered.
When these people the over space, they allocate one desk for you, so that can be.
No, but they have all two facilities. They don't give you a particular desk number. They just give you a virtual this thing, and anyone comes, they won't be able to identify a particular space for that entity. It is just virtual. There is no specific allotment of a particular chair or a desk. It comes with a different plan. That's a different.
A different plan for them. So they would have physical, but
But
the
then that comes as a space.
physical space. So here, there also here, right? There are, so unlike it's similar to how these people work here. There are a few of these vendor companies who are actually there who give you as a work as an authorized representative for that state. They have to.
Here in India, what happens? There should be year mark place.
Correct.
But there is it such a requirement is that an individual, he can be.
Not a year. Not. No. Audit requirement in US is so unlike India statutory audit, there is no requirement for audit. No, except that for a, it is the audit requirement is enforced only when either government asks it or IRS asks it or any client or any when you are taking a contract or bank, like the bank says that okay, give me a audited financial statement, then yes, no statutory requirement except that and audit is basically there are three kinds of, one is compilation, then the second is review audit,
and third is a full-fledged audit. Now, most of the time it is a review audit. Compilation is just in checking arithmetical accuracy that okay, this is all okay as per US GAAP. Review audit is as per US GAAP, but it's a limited. Your scope of work is limited, and full-fledged audit is mostly for bigger organizations or so. When government only asks, let's say if you are taking some housing urban development subsidy and governments are their IRS is actually, then they will IRS ask for it. It's like a full-fledged audit. Otherwise, most of the banks, when they take some small business loan or so, they say that give us a review report or CPA certified finance. That is called a limited review. They do as per US GAAP and stuff. That's that is SEC listed would be the listed companies. Yes, yes. I'm talking about regular corporations. As per mandate, it is not an audit. Two. Yes. Minimum directors too. Sorry, for a C corp, the minimum shareholder is one also one. Yes, 1%. Correct. $71. Yeah. Yeah. Correct.
But they say that there's a permanent and
Yeah. Correct.
why is it that is the case?
The penalties can go more than $10,000 also. 547172. The reason for that is that this is a form which is more of a 547172 is governed for foreign corporation, means foreign owned corporation also. Yeah, either can be a corporate or a individual also. So what happens is IRS has discovered earlier that huge shifting of money is happening from here to US. Sorry, US to some foreign company. So if there is a subsidy, I can actually bill. Let's say Indian company can bill 125,000 instead of 125,000. I can bill 180,000 also, which essentially means my corporation profits would get reduced, and which without tax it is going. So they are actually seeking the information of that. If it is a related party only or related corporation, if I seek that information, I would be able to at least get into know that what has been actually shifted. That just think, consider this as it's more of a TP form also. Transfer pricing, because whenever there is a related, right, more than 25% ownership and all, that is where that third party, so they will be forming is that there is an arm's length transaction has happened or not. This is more for evasion, controlling the evasion of the, if there are any evasion happens or not, happened or not with that. Correct, correct.
The end of the form they also
Yes, correct, correct.
done. Why is this only the proof and
No, so because it is a related party transaction outside of US. Related party, there is a related party outside of United States of America, which actually means, so IRS needs to know whom you have paid to, which is a related party, because that is essentially is your own thing, right? If you have paid 100, which the as far as the arm's length transaction would have been only 50, which means that you have shifted the money from India. Yes. EP audit is not mandatory, but investor or that require IRS requires sometimes. If IRS can, or the request, it is on need base, need base. But most of the funded companies, right, startup funding and all, they do the TP audit by Investor, yeah, correct. The money is flowing, but everything is being, yeah. Hmm.
Every subsidy.
Yes.
Time limit that they can, this one, like, we have already filed a form. Give you the actual scenario. We have filed a form for us, 5, 6. Somewhere down the line, we have. We got to know from our accountant saying that, okay, you have not filed this 5472, 5472 is not part of the accident. So it is after 4 to 5 years that we have got to know that that form is not included in that. So they say that if they find out, then only they can have the money. So are there any maximum time limit that they can come to us? Like in India, we have 6 years.
6 years.
That they can do what accident.
No, so generally there is no time limit which they can come back on that, because unlike here, right, you can still file 10 years return as time also together right now also. There is no time limit on the IRS side as well. But we have seen from my experience in last 15 years, I have not seen IRS going back more than 5 years anyways. Not seen that. Okay. 5%. 7.
Self-employment tax. Earning a salary. Apart from there.
Yes. So if he's earning a salary income, the social security tax would be deducted by the employer, and in the W2 and all it would be there. For his personal consulting income, he will have his own calculation of income minus expenses, and whatever profit remains on that he has to pay on that, only on that portion he has to pay. Yes.
A lot of people what happen they do.
Correct.
Global income or only the income is
The global income. On the global income. Is
Indian resident
yes.
going to and from Dubai,
Yes.
India.
Correct. Because Schedule C, whatever US says, right? Income from business across the world, they are saying. Income from business where the business is. Even if other income also, but other income does not attract self-employment tax. Only business income attracts self-employment tax. And business also, that too, proprietorship. Is a proprietorship. No. Pass through is not. That is not.
But there he might have gone to this.
Correct. But that whatever that is a net profit, which net profit from the partnership or S corporation. Social security and all is considered before that. They say pass through entity is basically a passive income. Because the LLC.
And then pass through it.
Yes. Correct. So that's why in US you will not see primary reason why they don't do self proprietorship is because of A, self-employment tax, B is the risk there on unlimited liability, right? As an individual service provider, if someone sues me, then his personal assets are also can be attached. That is why people don't prefer proprietorship. They actually say that I will form a single member LLC also, which is actually single member LLC is considered as a single member LLC also is considered more like proprietorship only. But it's still a entity. Inheritance. It's inheritance. Not the property wealth tax. Not the property tax. It's the inheritance tax. When you are inheriting a property from, and like an estate from a say one person to other, that is for. Correct. The real estate tax is just like property tax which we pay. That you have, that is there. That's more like a regular expense, a tax expense, what we call, like not a income tax, or it's like a whatever that county where you are there. My house is in Bangalore, right? So Bangalore property tax, whatever I pay, that is my property tax. That's called real estate tax. Real estate taxes are a deductible expense. A deductible expense. For a non-resident, no. For a resident, having is global. Correct. Right. So for a resident, his global income would be taxable. He has to report all that. But there are two things. There is a foreign tax credit, you can get it, and then there is a foreign tax exclusion also, you can get. Foreign income exclusion. So up to 1,07,000 as an individual, and if we are filing jointly, up to 2,15,000 income you are excluded. Your income can be excluded. So any USD. So if I am earning, say, a person here, say for example, someone working a US citizen, he's earning say dividend income and other stuff in US. He's a US citizen only, but he's earning from here some $100,000, maybe 1 crore or $150,000. He can exclude that income. He can show as salary and then exclusion. If exclusion is not enough, he can then take credit. If exclusion, after exclusion, whatever, then proportionately tax credit he will get it. Yeah. In US it is allowed. Yes, it's allowed. Yes. They are allowed to. Yeah. No, it is only for individual.
There are certain states where I form a proprietorship there, so and that any proprietor firm doesn't apply here.
A lot of your start company
Mhm.
founders who are based of India, they have a company cooperated in Singapore or US, and they merge as a subsidiary in India. It's basically a non-technical, right? So the Indian individual mostly in Singapore company, holding companies in Singapore. Not sure exactly, but
But in US, I've seen on corporation or individuals, I am not much aware about that.
After they are
But when you say PE, permanent establishment, right? In that one. No, there is no requirement which are there for the PE. Means you can open up without incorporating also as just like a just a branch or something like that, right? As you can still work on that one. There are many few companies which I have seen are just working as a regular. But their threshold, I don't see there is a threshold in that one, that you cross this particular turnover and then you need to have incorporation or that one.
Foreign company, big corporation, with the where corporate India, I think what it is. Foreign companies will look at the poem position to manage. Is there any simple things like from asset from employees they are engaged in here?
We are saying, is there any criteria there for resident, for the non-resident in the US? US, right? On the US side. Not that I'm aware about. Yeah. Okay, I think
what is the best website, like which is the website for us to cooperate?
That is the state website.
So many other websites, no? So they corporate company. And one of my other friends are who are in US.
Correct.
They said that they went to.
We go to the direct website. We go to the state Secretary of State site only. That is easy. Go to Secretary of State. Yeah.
Or any kind of.
Minimum expense for incorporating there. Incorporating and maintaining as well, right? For a company. Say it would be, that depends on like that minimum expense, what is the overhead. It can range between some $500 to $1,200, I would say. Per year, I think. And the state, I am talking about the keeping this current, keeping the status current and other stuff. Yes, Srinivas sir.
Thank you, sir. It was a very interactive and excellent session. It was like one-to-one discussion. It was a very detailed discussion we had. I think by this session, our members have enriched their knowledge on US taxation and company incorporation in USA. I thanks a lot for your time and effort sharing your valuable knowledge. Thank you, sir. I thank on behalf of Bangalore branch of ICA. I thank all the members present physically and virtually to actively participate in this program. Thank you. Thank you all once again.
Thank you. Thank you very much.